Hello, hello, hello. Good morning, good morning. Welcome to another Before You Take the Trade analysis. I am JD the Great. If you haven't been to one of my shows, I do break down a little bit of an analysis before you take the trade. The whole entire purpose. So, if you do not have a trading community down below, I do have a link to my trading community that I'm part of, which is Cheat Code. Go ahead and join us. We have a lot of fun and we make money doing so. Also, if you have not liked, subscribe, or hit the bell button on my Instagram, by all means, take the time. Just go ahead and do that right now. I have my Instagram, I have my Twitter down below. And don't forget to hit the rocket, because the rocket is the way the algorithm works in TradingView. That way, if there's really, really good information, you can go ahead and share it to everybody else. So let's go to the charts. All right. So yesterday, it's like the market just went completely on an uptrend, took over, just did what it wants to do, and then after that, especially with the way overnight kind of played, it's almost like we hit the brakes and we have been consolidating. If we look at it, it's almost like everything is sitting in one spot. We got for NQ, for example, we have from here, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 hours where it just stayed between the price of 16,595 and as high as about 16 615 or so, give or take. The only thing that's really moving is oil. I kind of played this earlier this morning up until 77, and it looked like it's moving another few cents above. So that one's kind of moving. Oil, gold, a little bit of natural gas has been moving, but the indices, forget about it. It's pretty much just doing its own thing, and it's just being difficult. So it's kind of hard to trade unless you just like range trading, which I wish you the best of luck if you are range trading. But looks like it is trying to make its move. Also, a little bit of an apology. I did run a little bit late than I wanted to, and plus my mic was not picking up. So now I kind of got it at fixed. One day I'm going to get it all together. The whole purpose of the show is supposed to be from 7 to 7:15. So this one I'm probably going to be lingering a little bit later than I normally do. So just enjoy this show. All right. So let's go ahead and get to the chart. Starting with NQ. So let's dig deep into this one right here. It looks really much like a bull flag or a bear, scallop, or however way you want to call this. But this is more like a pattern where we're just condensing after making a complete markup. So if you don't know this market cycle, it usually turns around and does mark up. Well, you get an accumulation. So accumulation, markup, accumulation, or distribution, mark down, or mark up. So in this case, it looks like we did an accumulation right when this data came out yesterday, and then we did a markup the whole entire day. Now we're doing what's supposed to be distribution and come back down, retest some levels, but it looks like we're holding at this level, and we may do one more markup based on what I'm seeing here on this chart. All right, so looking at this, as long as we don't break this level here, we will not, hold on, there we go, this level here, we will not start to affect any of these imbalances that brought us to this level. So with the cheat code algo, you can kind of see we got a little bit of an uptrend or up channel here, so we kind of moving sideways. So if we take a nice little trend line like this and extend it out, we could be consolidating into 11 o'clock Wednesday, and then it just starts to pick up and then try to retest this level, because that's what it looks like right now. But what I would like to see is a nice healthy pullback, bring us back down to here, and then we could go ahead and try to continue to that upside after that bounce. But we'll see what happens there. All right, let's go ahead and get into the next one, which is oil. So now oil has been doing something fun. Like I said, I kind of marked this off yesterday. If you haven't watched my video from yesterday, I'll do a little recap. We are in a reversal zone based on some of these levels here. I am bearish generally, so even though we bounced this up, I just took an opportunity for what it was. And we only play what the charts gives us. We do not actually force the market to do anything that we want. So even though I'm generally bearish, I did take a bullish stance for a few minutes just to take this upside. So if we look at this was like a Morningstar action, and when we had this whole entire breakdown here, it basically nullified this Morningstar. So I think a few more, I don't know, maybe a couple bulls are still trying to fight this battle, but we did kind of come to this level, broke through, then we stopped about right here, and it kind of consolidated for a second. Then when we broke through, I knew that we were just going to continue to the downside. It was a nice little move to play to the downside, but we are going to bounce. Why? Because we have this jambalaya rice looking of an order block, a lot of action here. So there's going to be some consolidation, some bounces, and you could see here, just to kind of give an idea, here's one bounce. This was a 647 tick bounce, or $6.47 bounce. This is what CL can do. So when it comes down to some of these levels, make sure you mark it out, and we could look left and we see that this area here is going to be tough for us to break down and get to the $65 mark, which is the lower mark that I'm kind of aiming for as well. All right, so that is oil. Let's go ahead and get into gold. So gold has been bearish. It's been beat up a little bit, especially after it hit the 150 mark and continued down. But where it is right now is a very interesting spot, because even though, like I said, I did mark this up, I would be bullish if it come up here. I am bearish based on that. But this 50 EMA with a solid golden cross that we've been on ever since we didn't put the death cross here is the reason why I am not playing anything to the downside right now. But if we can break below this order block, come down to here, then I'll play it down. But I did miss my opportunity to play this down when we rejected at this level. Kind of slept on this one. But if you did take any of my notifications from before, especially how I kind of broke it down yesterday, you could have easily taken this down, and that would have been about 138 ticks just on that alone. All right, so that is gold. Let's go ahead and move on. ES is another one that is doing this whole entire I'm on vacation, don't really want to go anywhere, but I also look like a bull flag, especially with the stochastic pointing up like this. Now, remember this, when you have your oscillators that's telling you something and it's letting you know what it's possible that could happen, just take your oscillators for its word. Make sure it's going in the direction that you are looking for, because if I'm playing this to the downside and I never broke any levels, that tells me that there's supporters at these areas, and there's a possibility that I'm going to continue to the upside, just like this oscillator is telling me. So I would love for it to come down to the 50 EMA and then bounce, but based on what I'm seeing here, there is a little bit of a possibility that it's going to try to hold this, turn this into that bull flag, just like how NQ looks like, and continue to that upside. All right, let's go to the next one, the British pound. British pound is doing its job in a way, right? The dollar needs to technically fall. So before it can fall, it had to reset some of the oscillators. So the British pound kind of moving up made it fall a little bit. But now with the British pound dropping and the indices are holding, it makes me think that we're going to get a range on the British pound while the dollar is falling. So if we look this side by side, you could see this is how the British pound is looking. We're dropping here and the dollar is rising. So I think they're giving an opportunity for it to kind of rise, and we didn't go nowhere on any of the indices. So could it be that we're rising on the dollar just so that way it can reset the oscillator on the dollar, and then as soon as it starts to point to the downside, we're going to get another leg up in the indice? Possibly a new leg up, because the stochastic on the British pound and the stochastic, oops, let me reset that, on NQ looks very similar, same as ES. So could this be the signal that we're looking for if we're going to try to play this to the upside, that the British pound is going to put enough pressure to make the dollar fall, and then we go ahead and continue to that side? So that we'll find out when the jobs reports start to come out. Oh, sorry, not jobs. I think today is PPI. Today's PPI. All right. So next one is natural gas. Natural gas actually made a nice little move to the upside. I did not give enough credit to it, to this downside being over, because at the end of the day it is in a overall downtrend that it looks like it's irrecoverable for right now. But right now I am going to put another deviation of this trend line. That's that one. Let me do it from here. Let's do it like this. So from here, oops, wrong one. That's not the level. This one. So from here to about right here is what I'm looking for, a solid break if I'm going to be anywhere near playing a bullish side on natural gas. It does have to get past its 50 EMA at 2.359, but if it doesn't break that, then to be honest, there is almost no purpose for you to try to play this to the upside. Just get ready for it to reject one of these levels and play to the downside and break one of these levels if that's what you want to play. But a good solid 34, 35 ticks to the downside, I think is very possible. The only thing is, if we go over to the daily, this thing has been beat up. The 4 hour, it's trying to turn up. The 2 hour, it's already turned up. And then the 1 hour is kind of telling us like, hey, you know what? We've been running for a little bit. I'm tired. Let me reset. Maybe even if we come to the 15-minute, get it to come back down for just a few, and then to probably give you a reset and then put some pressure on this downward trend line. That's one way of handling that. All right, let's go ahead and keep this going. Russell. So Russell usually leads the way on all the indices when it's all said and done, and the Russell is telling us that we're consolidating as well. So until the Russell actually makes an upside or a downside move, I'm not going to take the other indices anyway serious, because that means none of the investors are going back into the small caps or taking money from the small caps, and I cannot react to the rest of the market. So I kind of use this as an indicator as well. You can see right here on the daily, after making such a wide range here, I think we're probably going to try to build ourselves an inside bar, but we'll see. I don't want to jump to conclusions yet because we got some news that's coming out in 19 minutes. All right. And then to the dollar. Already talked about the dollar. I've explained this on yesterday. This is probably going to be one of the most critical things with the dollar. So one thing that I want to see from the dollar at this point is some of the imbalances that it's actually creating. Is it going to break it, or is it going to use as support? If you're going to use as support, then we could go ahead and just play to the upside, and the market can tank and reset where they need to be. But if it's just going to keep on playing this sideways, sideways, sideways thing, it makes me a little annoyed because it doesn't give me any real direction. I'm a trader. I only make money on the appreciation and depreciation on the market. There is no purpose for me to take any trades when we're consolidating like this. I may go ahead and play the commodities today just to avoid any type of chop in itself. So going on, if we look at the dollar, you could kind of see that we are starting to make a nice move to the upside, generally speaking, right? But this consolidation took a little bit of steam out. So the thing I did bring up yesterday was I was looking for it to kind of come up to here, maybe come back to this level, and then get back into this order block. And then after that, I could make a decision. Because if we can get to this order block, we rebalance this imbalance here. We go into this order block. We'll decide what happens with this order block. Do we blast through this resistance at 105? Do we reject the resistance at 105 and come back down? But generally, I'll be bullish the moment that we can break above here and hold above this 50 EMA, because it allows for us to continue to the upside and looks like a W if you really think about it. But since we didn't really bring it back down, I'm looking at this dollar as being generally a jerk. That's the best way I could go ahead and explain the dollar. All right, so we kind of broke down the commodities, and we also broke down some of the indices as well. So let's go ahead and get into some of the tickers. So a couple of the tickers, let me grab my list here, and we'll just look at the reaction of how the market moved with them yesterday. Where are you? Where are you? Where are you? There it is. Okay. All right. So one of the tickers I told you to look at was Oracle. So Oracle had a massive drop. Now, it was based mostly on some of their earnings report, their guidance along the way, and plus some profit taking that's there. I would say, if anything, you may get a nice little push up a little bit before dividends, but again, you're probably going to get another drop again. But if you look at how this ticker is looking, we had a double top. So this was a little bit of an extension of that double top, and then here's your retracement. So if we break this down from a chart perspective, you pretty much are potentially looking at it like this. It's almost like this will be our downtrend to continue to this downside. So we're probably going to get a nice little breakdown. Probably back down. I think I did say this yesterday, and I'm a little fuzzy. Y'all can watch my video from yesterday. But if we break this 100 level, and I thought of it as a strong support level when it's all said and done, this can turn into a W and break out and then continue to the upside. But when you have oscillators pointing down like this, and the weekly looks like it was going to be it's more like a fake out or a bull trap that they went ahead and sprung on everybody, and then you got the monthly that is oversold. It doesn't give too much credence to the upside when it's all said and done. So I'm looking at this on the daily. So now I'm looking for this to go ahead and continue to this downside and probably get to the 95 level, and then we could look why the 95 level will be a problem. It'll probably be because of this entire order block that's right here, and that could probably hold it up. Now, what could also happen, and the cheat code algo is giving us a little bit of a sign of it, it could play similarly to a channel. So when we get to 95, you may get your spring up, and this is the spring up to run up for dividends, and then probably the 50% mark, or over here is going to be that rejection area. So Oracle, I like where you are. I don't think you're going to fill the gap anytime soon, but I'm looking to probably play this to the downside when it's all said and done. A little bit of retracement right now to the upside, but we'll see how that goes. Next ticker. I think we did Boeing, but I'm going to skip over Boeing for right now. I think we're going to go with JCI. Johnson Controls. I gave y'all this yesterday. I was looking for like an upward type of movement, but their earnings wasn't great. And you know, with the in a climate of where everybody's taking profits, especially with the market moving the way that it's moving, it makes sense that Johnson Controls did come down a little bit for missing earnings on both sides. But generally, this is a really, really good company. They bring money back to their shareholders. It's just a little top heavy, and whatever curl up that was happening is probably just going to need to be retested to see where the bulls are sitting and willing to go ahead and play this to the upside. Let's go ahead and continue. So yeah, at this point, this one we could kind of like throw this out right now, and whatever inverse head and shoulder probably was a little bit more shallow instead of so wide. So this probably was the move itself, and they took their profits. The 200 EMA did not give it a lot of chance that it was going to break through that. And with the sell signal being triggered here, today we should get a new trading plan that's going to flash. And when that trading plan comes into place, we'll probably get an idea. Ex-dividend date is December 15th. We may consolidate a little bit. Some people are probably going to go ahead and try to collect their dividends and then fall. So just keep that in mind as well before you start jumping into that position to the downside. Next one, Winnebago. Winnebago is a really, really cool ticker. Like I said, this was a pandemic darling because everybody was running away from hotels and everything else, but it does have earnings. I'm starting to see a little bit of a divergence, a bearish divergence on this. And if you're having a hard time understanding what a bearish divergence is, I'm going to break this down. But it does let us know, I'm a reversal trader 9 times out of 10. So what I'm looking for is these opportunities where the market is exhausted of its upside or downside. So with this bearish divergence, you could kind of see on the oscillators that it's starting to get a little bit exhausted playing to the upside, and it's going towards earnings. So I may play this down as it's starting to head to its earnings. So let's look at this, right? So Winnebago has a nice little entry level. The cheat code algo, the way we kind of played this, if it held above 69.05 with the oscillators pointing up, then I would have felt confident that we're going to go ahead and attack this 78 dollars and 10 cents. But since we're starting to show signs of weakness, and if we look at the CC squeeze, we're getting that bright green into a dirty green. That's usually a bad sign. And then we'll see the CC swing is starting to pinch, which is letting us know that it's getting weak too. We don't have the mouth opening wide. It's very similar to how you see with the MACD with the oscillators, but just a slight little bit of calculation to hold you when you're trading a little bit longer. So that said, I don't think it's the most optimal entry for you to play the upside, but if we do trigger this sell signal, which would be about around 67.55, I would be bearish towards that direction and looking for it to break past that 200 EMA. So we'll see exactly how Winnebago wants to handle this. Maybe the catalyst for them to spring up is earnings, and that is next week, Wednesday. So keep an eye on Winnebago if it's going to actually make this divergence or not. All right. And then let's go into some of the tickers that people like you have submitted in the video and let me know that they are looking for some of their information. Now, Casey is a one that's usually giving me a lot of tickers, things to look up, because he comes up with a whole entire pricing plan. I would say this, if you want to go ahead and do that as well, you can. And then what I'll do, I'll put it against the cheat code algo, because you could kind of see we have entry levels, take profits, and also stop loss. If you want to put that inside of the chat, by all means, go ahead and put that. I usually look over them and then I bring it into the next show. So let's go ahead and look at what Casey gave us yesterday. So the next one that he gave us was crowd. So let's go ahead and take a peek at crowd. Let me see. Boom, boom, boom. Did I do it? No, actually, let me take a step back. ANF. ANF is the first one. I'm going to do this in order. Abercrombie and Fitch. If you don't know who Abercrombie and Fitch is, that is the retailer. It's in the malls and as well. So for a retail season like this, especially with a Christmas rally, this is a good sign of where we're probably starting to get into that toppy area going into Christmas, because you want to do the run up going into Christmas, not trying to run into it right now and then you're picking up nothing but falling knives. All right, so you can see right here on the daily that it's and you can see right here that it's starting to get into this toppy area, and pre-market it's already at almost $85. But what I do like for this is that we have a nice healthy uptrend. We did have a pullback right here on the daily, and the MACD is curling back up again. But it's starting to put signs of possible divergences. You can see on this histogram, and the cheat code algo kept on giving warnings. But those warnings was good entries for more upside, because we never really extended towards the downside at all. We actually had a no return divergence here, which kind of triggered this whole entire new leg. So let's go ahead and put a nice little channel here to here and here to here, and this should go ahead and show you. So we're starting to break out of the channel here, and what I like about Abercrombie and Fitch is because he gave an entry, let's see, he gave an entry at 82.25. So that, okay, that was as of yesterday. So 82.25, if you did pick up on that, you should be happy. And he has a take profit of around $93. So let me go ahead and grab the take profit. Take profit at $93 should bring us, oh, maybe in the middle. Let's see. Give me a second. All right, so now what we're probably going to get is $93. I don't see $93 on this one, unfortunately. I don't know if he is here today, but $93 is a little adventurous, because that will bring it to all-time highs. Am I looking at it? Yeah, that would bring it to all-time highs, I think. So yeah, I would say for the most part, Casey, yeah, 93 would look good. And I think you probably got your Fibonacci's on this. Let me go to the daily. Let me see if I can kind of reverse engineer what he's probably looking at. If we throw a fib on this at this level to this extension, yeah, you're probably bringing it to the 0.27. I like it. I really do. For an upside, the only thing I have a little question mark on it is because it's all time highs. Now, does people want to take their profits along the way? So it might have run away a little bit. So I would say maybe wait for it to come back to the 82.25 for entry, just in case there is a retracement. Stop loss at $75 is not bad as well. But at the end of the day, I think it's a little toppy or it's already ran away. So if you're not already in it, I would find it questionable to jump in. So we'll try to see if there's another entry later. All right. So that's Abercrombie and Fitch. Next one is CrowdStrike. I like CrowdStrike. They're the tech company. They're in that cybersecurity side. Really good company. Let's see what Casey gave us. So he had an entry at 250. Kind of struggled with the 250, 250.70, and it's trying to hold its weight there. Let me see from the weekly. Yeah, it's been running away. Let me see if I can get some monthly levels. Yeah, we would have to go all the way to the monthly to kind of get your levels, because you have a stop loss at 227. 227 will bring you inside of this monthly imbalance. Let me zoom this in a little bit so you can see it. It'll bring you into the monthly imbalance, but not all the way through. I kind of like the level of 227 because if it's starting to break down, actually really 230. Let's go with 230. If it's breaking the 230, then you got yourself a monthly imbalance that's going to be retested. There's no need for you to be inside of something like that. But this right here is giving us a nice, good sign that this is going to continue with the MACD from a monthly perspective. Target 285. I like it. That brings you to TP2. So I'm thinking like 280, 283, 284 is probably the level that you're looking for. Good sign when it's all said and done. All right. And then let's do one more. His next one that he has is fast. Fast and all. All right. So fast in this regard, you have it as entry at 63.50. So you probably jumped into this based on those numbers. 63.50. Take profit will bring us to 71. I think we're in line. We are there. We're together on that. Your stop loss 59. We're all in the same page on this one. So stop loss at $59. $62 is our entry because it's letting us know that we already triggered our buy signal, and boom. And then this should give us a nice little continuation to the upside and get to $71. So now we get this $71. You're probably going to take all of your profits at that level. But 65, 66, I'll start scaling out. This will be a good way of playing it. Actually, you know what? Put it on my red list. Let's go ahead and look at Fastenal for a continuation on the upside. All right. On that note, that is our show. No one actually put anything for today's show to the upside. If you find a lot of this information helpful, by all means, hit the rocket. The rocket is the algorithm of TradingView, and it lets them know that I bring in some really good information, proper analysis, and it lets other people find me inside of the TradingView community. If you don't have a community, you feel like you're trading by yourself, by all means, click the link down below. It leads to my my cheat code community. Just go ahead and join us. We make money, we have fun, and I have a live futures trading floor that we do every morning. Let me rewind that. We do on Tuesdays and Thursdays, 8 o'clock to 1:30 p.m. And then on Wednesday, which was last night, we kind of did some night trading at 4 p.m. 4 a.m. until 7 a.m. So join us, have fun with us, and then we'll go ahead and knock it out the market. Also, go ahead and like and subscribe my YouTube. I have my Instagram. I have my Instagram and my Twitter. By all means, please follow me so that way you can go ahead and get some real key information. I usually drop certain levels that I'm looking at, and you can make some more money. Other than that, that is it, and I will see you tomorrow, really on time tomorrow at 7 a.m. You have a great day. Bye-bye.